Extremely important day today for gold. This whole rest of the week will be crucial for gold. Gold bulls. Man, it's the first day of the second half of 2026 and gold bulls are already sitting or standing or lying in their favorite yoga relax position in front of the screens because things are on the razor's edge with gold. Very important video today. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Daniel Wilhelmi, and we're going to jump right in. One small housekeeping note. Dividend video moved to Friday, obviously, because this is the first day of the second half of 2026 and what's happening in the gold market. And on Friday, I'll be on the plane to Miami. On Saturday, we will talk about the monthly candles for gold, silver, maybe oil, definitely the dollar. So let's jump right into it. Look, here's the deal. You look at all the fundamental factors, and I mean all of them. Medium to long term, we know there's going to be party in gold, and it's going to be legendary, but it's going to be tomorrow night. The party is going to be tomorrow night. Tonight, we can play Angry Birds or drink a porn star martini cocktail or whatever you want to do to take your mind off what's going on short term in gold. And that doesn't look promising. I've pointed this out before and we're seeing it today. So here's the deal short term. It's the first day of the second half of 2026. I told you yesterday, whatever happens yesterday, we should not put much emphasis on it. It's the last day of the first half of the quarter of the month. So the big players will try to establish the gold price above 4,000. That's exactly what happened. I told you, well, what's going to happen in the days afterwards, that's going to really reveal what's going on. And we're seeing today in Asian trading, in European trading, gold is down, but boy, it's fighting. The bulls are fighting and they know what they're fighting for, and it's this line right here. This is the new most important line, and it's basically 4,000. It's not only the round number of 4,000, it's that if we close below it, like where we are right now in European trading, if this holds or gets worse, it would mark a new low. It might not mark a new intraday low, but it would mark a new daily closing low. And that would obviously strengthen the already much stronger bear case for gold, which means we're making another low and we're starting to put pressure to this middle to lower end part of this blue support zone. And if that breaks, as you can see here, then we're going to get the massive flash out sell. We're going to get the panic selling. We're going to get the stops. We're going to get all the undercut, the liquidity grab. It's all coming. So the bulls will try their very, very best to hold the gold price above 4,000. But if they can't do it, then we're going down fast. And again, as I said, I think in yesterday's video, the video before, if you missed these videos, subscribe to the channel. You would do me a favor, and I think you would do yourself a favor, because hopefully you'll be ahead of the market with hot trades of the day, which I think we are, because I've called out we're going lower in gold. And one of the times I was calling it out was when we're at 4,215. And I said, listen, people are buying up this level to hold the gold price above. But at some point, if there's no additional buying, they will just stop buying because they cannot unload these positions into strength and therefore they're taking on too big of a risk in their books. And the second they stop buying, the gold price will just collapse. And that's exactly what we saw here. And we have the exact same thing, just on a bigger level, because this is 4,000 going on right here. We're clearly seeing buying that's triggered to keep gold above 4,000. But we also see there is no follow-through on the buy side. This is exactly what we saw 2-3 weeks ago at 4,215. The follow-through didn't come. The bulls defended the zone for a while, and then they saw, oh, it's not coming, right? The cavalry is not coming. The reinforcements are not coming. And then they stopped buying, and then we broke down and sold off. And that's exactly what it looks like right now. The number one thing, I mean, we knew they're going to defend 4,000. We also knew there's going to be some buying interest in that area. But we see no additional follow-through buying. And if you look at the last days, it's actually getting weaker, right? So this is the number one point that we take away from the last days is there is no follow-through buying after holding 4,000, and that increases the chances that gold will go lower. We're gonna get that final sell-off that I've been talking about for weeks and months now. There's another problem for gold, but let's start with the good news. The good news is in the oil price. So the oil price is going down, and gold is going down. That means the oil gold trade is finished. So we can cut that out. That's done. And now you say, well, wait a minute. I mean, Daniel, give me a break. That's the good news? I mean, I know you're German, and the Germans are not the most positive Caribbean dancing in the sand people in the world. Nobody ever accused us of that. But that's it. Yep, that's it. Because the number one correlation trade, and I've pointed this out here for weeks, and you are well ahead of the market because for some reason, not a lot of people are looking at this intermarket correlation strongly enough, is the dollar. The dollar is what we need to pay attention to. And what do we see in the dollar? We're starting to see that the dollar corrected or consolidated, rather. That's the better word. The strong up move that we saw through all of June. Remember, this is here. This is June 1st. This is all in June. Now, in the middle, we got a very healthy correction that took out some of the heat, but still, that's a big up move. If we go even back to May, so basically for the past 2 months, even bigger. But again, 2 healthy consolidation phases in the middle took the heat off. But this is it. We got 3 days of profit taking, if you can even call that, of consolidating at the upper end of the resistance zone, and now we're moving up already. And if we get follow through on this breakout, and I think we will, then you have the factor that will put the pressure on the gold price, where the bulls and the 4K defenders will at some point just throw their hands up in the air and say, well, that's it. I'm cleaning my books now, which then it's going to put, by the way, additional selling pressure on the gold price. And the gold price is going down. That's how I see the markets right now. It can't be surprising to us. right? We've talked about this for weeks now, for a month even. Is this what we want to see? No. I want to see a gold price at 6K. I know I'm going to get it, but I'm not going to get it in the third quarter, very likely. I mean, it's possible, but the probability is like minimal. So, like I always say, we have to trade the market that's ahead of us, not the markets we wish we had. And the market that's ahead of us tells us gold is under severe pressure. The 4,000 needs to hold on the close. The small intraday undercuts don't really matter that much. If it doesn't, and if the dollar strengthens, we're going to get the sell-off in gold, which, as I told you before, then I will use aggressively to buy into the mining stocks and some gold positions. Now, how low can the undercut go? Well, let's go with this. If we run a fib from the time we broke out to the new all-time highs, and this whole rally started March 2024 to the all-time highs, then we see that we got the 0.5 around 3,830-ish. And if we zoom in a little bit, then we see there's a zone, there's some structure here. So somewhere around 3,850 to 3,750, right? This would be this zone right here, somewhere in here. So if we get that, we break down, we get a sell-off in that area, and then go back up, get a candle like this one intraday, get a washout. That would be the ideal scenario under the circumstances, and then starting to form longer term structure around this support zone again. If we dribble down like here, where we broke down and kind of just fade down and don't get this flush sell like here, then we will go down to 3,500. So I will keep a now larger percentage of my capital that I want to allocate to the gold and silver miners in my back pocket, because the past days and about 2 weeks have shown us that the probability that we're going to go all the way down to 3,500 have now increased. We did not get the fast flush out, the big time sell-off, the massive waterfall sell-off after we broke the 200, after we broke the uptrend. If we don't get it after 4K, then we have to assume we're going to get a slow grinding gold price lower to 3,500. I still think we're going to get the flush sell-off. That's the higher probability, in my opinion. But we have to adjust to the markets ahead of us. So that means, am I going to go all in a flush sale? Absolutely not. Rather the opposite. I'm going to increase the percentage of the money that I hold back if we go down to 3,500, because that probability has shifted. Now, how high should that percentage be? That's up to you. I'm not your financial advisor. Everybody needs to make their own decision. That has a lot to do with what's the percentage of mining stocks you want as an allocation in your overall portfolio, and your risk tolerance, and all these type of things. So I'm just telling you what I'm planning to do as far as the signals in the gold market. That is it for today. Have a great day. We see us tomorrow. Bye-bye.